Hello traders, how are you doing today? Today, let me see, today is September the 14th, 2009, of course. The time is 3:04 p.m. Right now, for today, the Dow Jones, it was down today a few points. As you can see right now here, it's at 9,615. I'm currently up $590 for today. What I did was I bought 1,000 shares of GE. I think it was Friday, I believe it was, and the purchase price at that point was $14.67. The reason why I bought GE was, well, they had some positive reports coming out from a few analysts that upgraded the stock. I think it was J.P. Morgan or Goldman Sachs or someone. They had upgraded the stock to outperform price target 18. I looked at the technicals here. I want to show you some things. Okay, now I want to take you back here to May. Okay, let's look at May around the 7th. Okay, now as you can see right here, it was an uptrend. Then we have this little guy right here is called a hanging man. It's a price reversal pattern, which I'll explain later. Now we see price movement down. We see it up. We see it down. We see up. We see a channel right here. The channel is between 14. We got a resistance line. We got a support line here. Let's go to support at around 1250, and we got a resistance line around the 1413 mark. Now it traded sideways, and we see a lot of selling pressure right here around June. Okay, now and we see more selling pressure all the way to $11. Now around July the 10th, we see this little guy. It's called a doji right here. It's a candlestick price reversal. I'll explain that later also. And we see an upward movement here, which is followed by, and see this volume bar right here. We see a lot of selling. This green indicates selling pressure. Now, buying. I'm sorry. This green indicates buyers. Now, you want to always pay attention to the volume. In fact, volume is more important to me as a trader or as an investor than the actual price movement of the stock. Because why? Because the price movement of the stock is determined by the actual volume. Now we see the volume. This indicates buying from investors and possibly institutions. So we see a lot of buying take place. But we see the buyers come in 1, 2, 3, 4, 5. Right here. We see all these volume bars come in right after the price decline. You see. So once it gets to a bottom, I guess the institutional investors, the hedge funds, or what have you, they figure that, okay, this is a good time to buy. So they start accumulating shares. We see a little distribution here, but we see also five more buyers here. Where for buying, we see a little bit. Okay, we see a little sell off, and all of a sudden we see this price movement right here. Now what happened is, okay, remember I told you about the hanging man here. This is this resistance line. Okay, look over this resistance line. It was pierced right here, and we saying this was preceded by a lot of volume, which is buyers coming to the market. We see a little sell-off pressure right here. So we see the buyers come back. So what I'm detecting here are large investors accumulating shares, but they're doing it very discreetly. We see a little sell-off right here. Now I got in around I got in at 14. I got it right here. I got in around 1467. So I got in right here when on this gap up. Okay, I purchased this a few days ago. I purchased 1,000 shares. Now, it was a little sell-off Friday, and today the market was down. All of a sudden, the president came on. He made a couple of good comments about the market, and the Dow Jones was down up until I think it was 30 minutes ago or so. So now we have positive territory for the Dow Jones, which is right here. It's only up 8.62, well, 8 points, almost 9 points. But we have you see in this particular position, I'm up 550 total. Okay, now that's not bad. And what I'm doing now with this stock, I want to stay in GM for a minute. I'm not necessarily day trading GM. General Electric, I'm sorry. I'm not necessarily day trading it because I'm looking for a price target of more closer to 1,000 as opposed to 500. So we want to, right now we at 560. So we want to try to stay in here and watch it, and maybe start selling off some of the position once we reach more like $600 or $700. Now, the financials. Okay, now before we get into that, I want to show you something that's very interesting here. Now, whenever you have a stock that it goes up here and it meets a line of resistance, comes down, which is to the support line. Once it breaks through this support line, that's very significant, especially when it's preceded by a lot of volume. Here, we see a lot of selling pressure. But now, so we have a new support line, which is here. So now we see a lot of sellers come in. I'm just rewinding. I'm showing you guys something that's very significant. A lot of sellers come in here. A lot of buyers come in. I'm sorry. Now, you see this line? This is the highest price that this stock traded for around May to 7th. Okay, now, once we get here, a few months later, around August the 7th, right, we see it pierce through that line. We see a little sell-off, and now we see right here it's piercing through this line. This is called the line of resistance, and it's followed by, see the volume. We got nice volume coming into the market. In fact, we have a lot more volume that's possibly coming into right now. So we can look at, and now, okay, another thing that's significant I want you guys to look at is see this green line right here. Okay, now this is a simple moving average 10-day. What this tells me is, this tells us the average price that this stock was over the last 10 days is right here. So we see the company stock price is a lot higher than this 10-day moving average. Okay, it kind of hits it, comes below it, and it touches the 20-day moving average, which is right here. I have this. This is how I have my chart set up. And finally, I have a 50-day moving average, which is right here. But anytime you have a company that breaks this resistance line and that shoots out, then that's very, very significant, and something that you definitely want to pay attention to, because this tells